Hey everyone, it is Julie here with TipRanks, and today we're taking a look at 3 stocks that have over 100 years of dividend payments. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 dividend paying companies that have each been paying dividends for over 100 years. Altogether we have almost 400 years of dividend payments, and they all come in with a buy rating from analysts, either a moderate or strong buy. So today we're going to take a look at these companies, what it is that they do, of course those dividend details, and how Wall Street is weighing in on the stock's future. Just before we get into all of that, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's get right into these 3 dividend stocks. First up is a company whose name is known in many households, that is Colgate-Palmolive. They trade under the ticker CL, currently priced at about $93 per share. They've been climbing steadily the past year, gaining 27% and are up 8% over the last 3 months. Colgate-Palmolive is a multinational consumer products company engaged in the production and distribution of household, personal care, oral care, healthcare, and veterinary products. They sell their products across more than 200 countries. Their well-known global brands include Colgate, Palmolive, Speed Stick, Ajax Soft Soap, and Hill's Pet Nutrition. Colgate has been paying out their dividend since 1895. That is 129 years of dividend payments. And on top of that, they've also been increasing it annually for over 60 consecutive years. Their current quarterly dividend is 50 cents per share for a dividend yield of 2.1% and a payout ratio just above 57%. They shared their Q1 earnings report back on April 26th, and the company did come out with both an earnings and revenue beat. For their first quarter, they reported earnings per share of 86 cents, beating expectations by 5 cents per share. And their revenue came in at $5.07 billion, and they saw their net sales increase 6.2%. A 5-star analyst from Morgan Stanley just reiterated their buy rating on the Colgate stock last week. They slightly increased their price target, saying that Colgate remains the firm's preferred household products pick, and their recent time spent with the chairman, president, and CEO, as well as other executives, confirms that the company is well positioned to continue to post organic sales growth and earnings per share growth at the high end of large cap peers and above consensus. With 16 current analyst ratings, the Colgate-Palmolive stock comes in as a strong buy with 12 buy ratings and 4 holds. And their average price target comes in just shy of $98 per share for an implied upside potential of 4.5%. Looking at the most recent ratings down below, on the low end we do have one of our hold ratings with a downside of over 9%, and our high-end price target comes from Argus Research with an upside of over 14%. For our second dividend stock, we're moving over to the energy sector with Exxon Mobil. They trade under the ticker XOM, currently priced at $113 per share. Their stock has gained 10% overall in the past year and is up 6.5% over the last 3 months. Exxon is the largest U.S.-based international oil company and is the second largest on the global scene when measured by market cap. The company's main business is in hydrocarbons, the discovery, extraction, transport, and delivery of resources in both crude oil and natural gas. And they're also a leader in the petrochemical and industrial chemical industries, and also have their hands in the plastic industries. Exxon is the longest paying and highest yield dividend stock that we're looking at today. Dating back to 1882, the company has been paying a dividend for 142 years and has been increasing that dividend annually for 41 consecutive years. And their current quarterly dividend comes in at 95 cents per share for a dividend yield of 3.29% and a payout ratio at just about 43%. They also shared their latest quarterly report back on April 26th. However, Exxon did slightly miss expectations. For their Q1, they reported earnings per share of $2.06, falling 13 cents short of analysts' expectations, and their first quarter earnings came in at $8.2 billion. Recently weighing in on the Exxon stock was a 5-star analyst from Wells Fargo. The analyst noted an upcoming acquisition, and despite it diluting the earnings per share, it's expected to have positive long-term cash flow and production outlooks. They said their confidence was further bolstered by Exxon's reiteration of their expectations for Permian production to reach approximately 2 million barrels of oil equivalent per day by 2027, promising double-digit returns and improved environmental performance. There are currently 15 analysts weighing in on the Exxon Mobil stock, and it does come in as a moderate buy with 11 buy ratings and 4 holds. But price targets are bullish, with an average price target coming in at about $137. That would imply an upside potential of 21% from current prices. Looking at our list down below, on the low end, we do have a hold rating back in April here with an upside of 6%, and our high-end price target comes a bit more recently here from UBS with an upside of nearly 35%. And our third dividend stock with over 100 years of payments is PPG Industries. They trade under the ticker PPG, currently priced at $133. They've had some ups and downs the past year, and while they were climbing into the winter, overall are down 2.5% and have cooled off about 4.5% in the last 3 months. PPG Industries manufactures and distributes paints, coatings, and specialty materials. Along with their popular interior and exterior paint brands, PPG Paints, Glidden, Comex, and Sigma, the company is also a leading producer of automotive and industrial coatings, architectural finishes, continuous strand fiberglass, and chlorine and caustic soda. Their dividend payment started back in 1899 for 125 years of consecutive payments, and they've been increasing that dividend consecutively for over 50 years. And their current quarterly dividend comes in at 65 cents per share for a dividend yield of 1.97% and a healthy payout ratio at just 33%. Their first quarter earnings report came out back on April 16th. Now, revenue did slightly miss, while earnings per share were in line, but the company did also announce a $2.5 billion buyback program. Their Q1 earnings per share came in at $1.86, which was in line with estimates and marked their 5th consecutive quarter of year-over-year growth, while revenue came in at $4.31 billion, slightly missing by $120 million. Our most recent analyst ratings are from back in April following that quarterly report, one of them coming from Bank of America Securities. They said they believe that PPG Industries is poised for growth despite some short-term hurdles, and that they see acceleration in earnings on the horizon. Their recent performance was hampered by difficult comparisons from the previous years and macroeconomic challenges, but they point to strength in aerospace, protective, and marine. With 14 current analyst ratings, the PPG stock does come in as a moderate buy with 9 buys and 5 holds. And an average price target of $157 would imply an upside potential of over 18% from current prices. Looking at our ratings down below, our low-end price target is a hold here with an upside just shy of 6%, a lot in the low 20s, and our high-end price target comes in at $166 for an upside of over 24%. So that is a quick look at 3 companies, all boasting well over 100 years of consecutive dividend payments. Let me know your thoughts on these companies in the comments down below and what other dividend kings you love. I always appreciate hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so make sure you're always doing your own research and due diligence. Thanks so much for watching. Have a great day, and I'll see you back here next time.